And welcome back. One of the nation's largest home builders, Lennar, released their Q4 earnings report last week. They announced a huge decrease in new home sales, yet a huge increase in buyer cancellations. And as a result of this, Lennar had to offer more buyer incentives in order to drive home sales, and also in some cases, lowering their asking prices on their homes. Lennar also identified the markets in the US that are most impacted by this housing market slowdown that we're seeing right now. And I'll share those cities in today's video as well. Before I share Lennar's Q4 earnings report here, I want to share this report with you guys very briefly because it really shares how builder confidence has been declining big time this year. So this is according to the National Association of Homebuilders. They just posted this a couple of days ago here. It says high mortgage rates, elevated construction costs, and flagging consumer demand, in other words, decreasing consumer demand due to affordability constraints, have dragged builder sentiment down every single month in 2022. It says here, builder confidence in the market for newly built single-family houses. So builder confidence for builders who build single-family houses has posted its 12th straight monthly decline in December. Therefore, builder confidence for building single-family houses has decreased every single month in 2022. And right now, builder confidence is at its lowest reading since mid-2012, excluding the onset of the pandemic. And because we're seeing this decrease in home buying demand, home builders are really kind of struggling in order to generate home sales. So according to the survey right here, they said 62% of home builders are using incentives in order to increase sales. That includes providing mortgage rate buydowns, in other words, buying down their rate that home buyers are paying for houses right now, paying points for buyers, and also offering price reductions on their houses as well. And because builder confidence has decreased every single month in 2022, it makes sense that nationwide, we're seeing a decrease in permits being pulled as well as housing starts. This is actually a report I have not shared with you guys yet. I'll make a separate video for you guys here in just a little bit. But this is based on new home construction numbers for November and compare that to years past here. So permits being pulled right now for single family houses is down a whopping 29.7% from November 2021. So on a year-over-year basis, permits pulled decreased by about 30%. On top of that, we're seeing a decrease of housing starts nationwide as well. So we're also seeing a huge decrease of housing starts for single-family houses nationwide as well, because on a year-over-year basis, that declined by 32.1% this November. So not only are we seeing builder confidence decrease, we're also seeing builders really pulling back on getting permits authorized in order to build houses, but also a huge decrease of housing starts as well. And that leads me to Lennar's latest earnings call for Q4 2022. This was just posted on December 15th this year. According to Lennar, market conditions continue to deteriorate in the fourth quarter. This, of course, is driven by interest rate increases, which is causing sales to slow down and price corrections to occur as well. This is mixed with supply chain issues still, high labor and material costs, and elongated cycle times make it a very complicated landscape for home builders to end the year in 2022. So what they're saying here is that because rates have increased so much, that's decreasing home sales for their brand new houses here. And at the same time, they have supply chain issues and high labor and construction costs, making it a very challenging landscape for home builders this year. And they said the very sudden movement in interest rates experienced over the last 6 months have very quickly affected both housing affordability and consumer confidence, resulting in a very rapid change in market conditions and demand. And Lennar's current view is that production or building of single family as well as multifamily buildings nationwide will be down between a quarter to a third in 2023. This means that approximately 1.5 million homes produced over the past couple of years per year will drop to around 1 million homes produced in 2023. So in 2021 and 2022, they're saying that 1.5 million houses were being produced or built in those years. But in 2023, that's going to drop to 1 million houses, and that's further going to cause a housing market shortage. In regards to cancellation rates, have a look at this, because right now the cancellation rate for Q4 is 26%, 1 year ago, it was only 12%. Also, because I've been making these videos for you guys for about a year now, actually I noted this as well, because in Q2 of this year, the cancellation rate was only 11.8%. Also in Q3, the cancellation rate was 21%. Now it's 26%. So of course, what this means here is that their cancellation rate has more than doubled from Q2 to Q4 this year. Now, having said that, Lennar also noted that their cancellation rate has been falling from the peak of 28% that was reached in October this year. And because Lennar is seeing a huge increase of cancellation rates and also a decrease in home buying demand, of course, home sales were down 15% on a year-over-year basis. They also touched very briefly regarding land acquisition. They said here they're going to reconsider every land deal or every land they consider purchasing here in their pipeline and minimizing exposure to falling land values. They started the quarter with $2.5 billion of expected land closings. In other words, contracts in order to buy land of $2.5 billion. They ended the quarter, though, with 3/4 of that spend. In other words, they went from $2.5 billion to start the year to $1.9 billion in land acquisitions. And they said here they either walked away from purchasing land or walked away from contracts to buy land or renegotiated contracts or pushed for reconsideration at a later time. So clearly they're worried about a decrease in home buying demand due to rising rates. And because of that, they're decreasing the amount of land they're purchasing. Now, here's something very interesting because Lennar provided the markets in the US or the cities in the US that are most impacted by this housing market slowdown. So they categorize the country in 3 major markets here. Category 1, markets that are performing well. Category 2, markets where they have adjusted pricing and also offering incentives for home buyers. And category 3, which are their most impacted housing markets here, may require additional pricing adjustments in order to increase home sales. Here are their 8 markets that are performing well. They're category 1 markets. That's in Southwest Florida, Southeast Florida, Tampa, Palm Atlantic, New Jersey, Charlotte, Indianapolis, as well as San Diego, California. Despite the fact these markets are performing well, they have to offer buy down programs, in other words, buying down the rate for home buyers, and offer incentives for home buyers as well. In their category 2 markets, there's actually 23 markets that are category 2. These are more significant adjustments that are being made in order to drive home sales. These are all these markets right here, which actually includes Sacramento, Boise, Chicago, as well as Tucson, Arizona, and Las Vegas. In these category 2 markets, they had to offer more aggressive financing, base price reductions, in other words, price reductions on houses, and or increase incentives in order to regain sales momentum. And this obviously varies on a community by community basis here. And in some cases, in order to avoid cancellations, they had to adjust pricings. So in other words, if a buyer goes to the builder and say, hey, I have to cancel the contract, I'm scared about the housing market slowing down, et cetera, et cetera. In order to avoid cancellations, in some cases, Lennar is reducing prices on their houses in order to drive home sales. So that's our category 2 markets. Let's have a look at category 3, their worst markets or the worst performing markets in the US. This is more significant softening and correction, which include 8 markets. That's Orlando, Pensacola, Florida, North Alabama, Austin, Texas, Phoenix, Arizona, Utah, Reno, as well as Portland, Oregon. In these markets, buyers are taking more time to purchase a house, and many of these buyers need to be convinced that now's the time to buy. I actually cringed when I read that because I don't think anyone needs to be convinced that now's the time to buy. I would say the best time to buy is when it's right for you. In any case, in these category 3 markets here, there's a fear that prices have not hit the bottom, which has led to elevated cancellation rates for home buyers. It says here we're focusing on establishing pricing that generates new growth sales to offset the cancellations. It's also required a mix of base price adjustments, in other words, a decrease in home prices, sales incentives, and mortgage buy down programs. They also touched on construction costs as well. According to Lennar here, construction costs continue to increase. So costs for materials and labor increased by 6% and 16% respectively on a year-over-year basis. And speaking of construction costs, here's something I actually found out this morning. One of my subscribers mentioned this because we're seeing a huge decrease in lumber costs for commodity prices. So lumber commodity prices right now is at $379. It has not been below $400 for quite some time. So compared to 1 year ago, lumber future prices year to date, they're down 67%. Also compared to 3 years ago, lumber commodity prices are down 9.24%. This means that lumber commodity prices right now are below pre-pandemic levels. We haven't seen that in quite some time. Also at $379 right now, this is well below the highs we saw back in May of 2021 when the price was actually just under $1,700. Now it's at $379 at the time of this video, which is the 22nd of December. What this means for you is that this could translate into lower lumber costs in the months ahead, given the fact that lumber commodity prices have been decreasing. And with that said, please comment below with your biggest takeaways from today's video. Also, if you guys got any value in this video whatsoever, then please hit the like button. I could appreciate that. Also consider subscribing as well. I appreciate you guys watching this video. And of course, I appreciate you. Hope you guys have an awesome day and look forward to seeing you on the next video.